So we just depreciated this asset using the straight line depreciation method, which assumes that depreciation is a function of time. Let's look at our second method. This is the activity method for depreciating an asset. So this is different than time. This assumes that it is the activity that uses up this asset in an effort to generate revenue, not time. So in this case, this could be hours, units. We're going to concentrate on units. We're going to assume that this activity method of depreciation is based on units that this machinery has produced in a year. Recall from the information that in total, we're estimating that this thing will crank out 240,000 units. All right? So let's think about the cost per unit. Because when we have that, we can look at year by year and depreciate this asset according to the units it produced. Now, how much of this 315,000 are we going to depreciate? Well, we have a $15,000 salvage value, so our depreciable base is the same. It's $300,000 of cost that we will wind up allocating to expense when this thing is said and done. So I'm going to take this $300,000 in cost, divide it by 240,000 units. Let's see what this comes to. That is $1.25 per unit. So let's think about year one. The information doesn't give us the number of units because it concentrates on year two. So let's just assume that there were 20,000 units produced in year one. So our depreciation expense under the activity method for year one would come to $25,000. That is $125 per unit times 20,000 units. All right, so $25,000 of depreciation taken in year one. Year two, how many did we produce? It says 25,500 units. So if we multiply that by $1.25 per unit, we get $31,875. All right, let's think about depreciation for year two, and let's think about ending book value for year two under the activity method. Our year one journal entry, depreciation expense, that was $25,000. Our accumulated depreciation credit, the same. Year two, we would debit depreciation expense for $31,875 and credit accumulated depreciation for the same amount. I want to note, just as a reminder, for year two, depreciation expense on the income statement is $31,875. But accumulated depreciation on the balance sheet would be the sum of depreciation for year one and year two. So we know what depreciation expense is going to be for year two. If I asked you, well, what's ending book value at the end of year two, what would that be? It would be the $315,000 minus accumulated depreciation. So what's accumulated depreciation going to be at the end of year 2? We had $25,000 in year 1. We had $31,875 in year 2. That means we're going to wind up with $56,875 in accumulated depreciation. And that will give us a book value of $258,125.